Thank you for watching this video and for your interest in PIERER Mobility. My name is Hans Lang and I'm Head of Investor Relations of the group. PIERER Mobility is the holding company of KTM, a leading European motorcycle manufacturer. With a focus on the premium segment, the company unites the brands KTM, GASGAS, Husqvarna, and MV Agusta under one roof. Also includes the high-performance components of the WP brand and the special KTM Expo high-performance sports cars. The e-bicycles from Husqvarna and GASGAS, as well as bicycles from the Fendt brand, round off PIERER Mobility's range of two-wheelers. Let me briefly summarize on this slide the developments of the first half of 2024. Due to a challenging environment, the financial results were negative, but within the current outlook for the full year. Therefore, we confirm the full year outlook once again. The financing structure is stable and solid. Working capital and consequently net debt are still at a relatively high level, but we expect improvements towards the end of 2024 and in 2025. Looking at our segments, motorcycle sales slowed in particular due to still high interest rates in the US, and the bicycle market was still suffering from oversupply. But let's look at the developments and numbers in more detail on the next slides. On this slide, you can see the sales to our dealers. They have come down compared to the first half of the previous year. The main reason for this are, as already mentioned, high interest rates in the US market. As people buy a lot of credit there, also motorcycles, high interest rates reduce the household's disposable income. In Europe, inflation levels in some countries is still quite high, with a similar effect on disposable income. In addition, the macroeconomic outlook as well as the various geopolitical crises are not supporting the sale of motorcycles. If we look at the market development of retail in general, i.e. on registered motorcycles, we saw unit growth in Europe, however driven by the low price segment and the already mentioned decrease in North America due to the interest environment. Indian market, however, showed a strong growth of 16%. It is worth mentioning that in terms of registered motorcycles, PIERER Mobility has more than 10% market shares in the important markets of Europe, the US, and China. The bicycle segment is being restructured, and this restructuring will be completed in 2024. Our core markets are the German-speaking European countries as well as the US. Why to restructure? Well, during the coronavirus pandemic, the demand for bicycles skyrocketed and came down in the years after the pandemic. The bicycle market overheated and we experienced disruptions throughout the entire value chain. As a consequence, inventory levels, our own as suppliers and dealers, reached record levels. This has caused a massive pressure on selling prices, and the reduction of inventories to normal levels is still ongoing. It takes some time. So what did we do? We divested our Raymond business and focus on the core brands, which is e-mobility bikes for e-bikes, GASGAS and Husqvarna, and for the bio bikes, the Fendt brand. On this slide, you can see that our brands performed very well in the first half of 2024. In terms of financials, we expect a significantly negative result in the bicycle segment of about 110 to 130 million euros, mainly due to impairments and restructuring charges, which have mostly taken place already in the first half of this financial year. Let's look at the financials. Revenue came down because of lower sale volumes, as just discussed, due to the economic environment and discounts we gave to our dealers. The production costs decreased by 8%, which is much less than the revenue decrease. The main reason for this is the cost pressure in Austria from high wage settlements but also from costs from regulations and bureaucracies here in Europe. Another item worth mentioning is the restructuring of the bicycle segment, revenues of minus 10 million, and additionally on a gross profit of 65 million. So in total, gross profit came down by more than 80%. SG&A came up by 9% due to the general inflation, but also the first consolidation of NV Agusta in the first half of 2024. The other operating income benefited from the NV Agusta acquisition with a one-time effect of 27 million. In total, we must say EBITDA turned negative in this first half of the year. The financial result was at minus 42 million after minus 30 million last year. This has to do with the significant increase of interest expenses as a consequence of the higher net debt levels. Income taxes were at plus 65 million. This is an estimate based on the annual tax rate for the year according to IAS 34. Bottom line earnings per share were minus 5.02 euros. Let's now take a look at the free cash flow and net debt level. Due to the negative earnings in the first half and the increase in working capital, free cash flow was strongly negative. Basically, we have a solid funding position with our banking partners, and therefore we increased working capital to support our dealers and suppliers to cushion the financial burden from the increased interest rates, in particular in North America, because dealers are for us strategically important business partners. They are the face to the customers. Nevertheless, as a consequence of these measures, net debt went up, as you can see on this slide. To give you an overview about the financing structure, because if debt increases, I think it's worth presenting the overview of how our financings are composed of. You see on the left-hand side, debt development, so financial debt for S16 leases result in total financial debt of 1.6 billion, deducting cash and cash equivalents. So we have a net debt of 1.5 billion. This is split up in various financings, and the first three of them, we also show a debt maturity profile, left bottom. Key message here is this is a long-term financing. There are no larger short-term needs to repay any product, so there is no pressure from this side to be expected. In addition, we have more than 200 million of undrawn committed credit lines. The transformation plan, earlier this year, when we gave the first outlook, we said 2024 is a year of transition. And that's what it is, actually. And the numbers show it. What did we do so far? We significantly reduced the production volumes here in Austria at our Mattighofen plant. We adjusted the headcount significantly in the first half, and we will do another headcount reduction of 200 people in this third quarter. The cost management has been tightened again. We focus on our premium brand strategy and streamline all the development processes to get more efficient here. Positive news is that the integration of NV Agusta is absolutely on track and running as smoothly as hoped for. And the restructuring of the bicycle segment with a focus on the high margin segment, this will be finished this year, 2024. In total, the cost-cutting effects taken will have a double-digit impact in this year. So for the outlook for the full year, as we said already earlier this year, first of all, the second half will significantly better than the first half. The revenue will decline by roughly 10 to 15% from already of last year of 2.7 billion. The EBIT in the motorcycle segment will be balanced to slightly positive. As said, in the bicycle segment, we expect a minus 110 to 130 million negative EBIT. This is essentially due to the extraordinary effects. In the first half, they were 75 million negative. Working capital and net debt will remain this year at a high level. However, it will come down towards the end of the year compared to half year. And we have a solid funding structure, which is the basis for our future growth. Thanks for watching, And if you have any further questions, don't hesitate to contact the investor relations team of PIERER Mobility.
Disclaimer. As described in the legal section on our website, seat11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. Seat11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.